Normally, markets in the summer get a little quiet. Traders go on vacation, volumes drop, and things, well, they move at a more leisurely pace. Yeah, someone forgot to explain that to the summer of 2025. Hold on to your seatbelts, folks. This is going to be a good one. Summer is traditionally a slower time for the stock market. Trading volumes tend to drop as institutional investors, analysts, and even retail traders take vacations, leading to, well, it's often called the summer doldrums. With fewer players actively buying and selling, markets they tend to drift sideways or in some cases they may actually become more volatile on lower volume. It's a season where quite frankly not much is expected to happen. And well, that's exactly why this summer is a little bit on the surprising side. In fact, maybe surprising isn't the right word because this summer has actually completely flipped the script. Instead of drifting, the markets are charging forward big time. We're looking at all-time highs on the TSX, the S&P 500, and the Nasdaq, just to name a few of the markets getting their bulls on instead of sipping fruity drinks under an umbrella. So what's fueling this unexpected bullish momentum? Well, in Canada, we got gold prices. They've remained strong as investors have been seeking safety. And that has given a lift to our mining sector, and it's also helped to anchor the TSX. Meanwhile, the big banks, despite fears over rising loan losses, they've they've held their ground really well, and this has created a lot of confidence in investors. Now, looking south of the border, optimism around interest rate cuts later this year and strong earnings from major tech players have lit a fire under the market sentiment. Add to that some very positive signals around the US signing some international trade deals, and it's created the kind of broad based confidence that, well, that's exactly what the bulls feed on, at least for now. A sub to the channel is the easiest way to keep the future content running. As we're about to see, those really good market conditions are certainly going to play into the challenge, into at least this month's update. So let's get to that challenge portfolio. We will of course start with the stocks that we haven't really added anything to this month. Well, we have Bird Construction they're actually sitting at a total return of 42.83%. So they had another solid month for sure. We have Scotiabank coming in at 22.16% total return. Diversified Dividend having a pretty good month, 29.13%. Extendicare 2.69%, and oh boy, they had a rough month for sure, but at least at least they're still in the green, and I'm pretty bullish on them. I think they're going to recover. We also have Fear and Technology Group coming in at 22.81%. Another really good looking one. Fortis, look at this, 28.53% total return. I am liking that. We also have the Harvest Bitcoin Leaders Enhanced Income ETF, and look at them. They're sitting at a total return of 46.76%. Holy banana bread. I have a feeling that they're going to be challenging for first place this month. We also have the Harvest High Income Shares ETF coming in at 27.17%. We have Hammond Manufacturing looking strong again, coming in at 18.34%. PPL and our pipeline ETF not doing so well yet, but they are in the green, 2.44%. Pizza coming in with a nice looking 28.34% total return. RMAX coming in at 8.37%. And of course, you guys know I love RMAX. That is my REIT ETF, and it is nice to see them climbing. So let's keep moving in that direction for sure. We have the Purpose Solana ETF coming in with 35.12%. That's not too shabby at all. Timber Creek Financial looking strong again, 15.16% total return. And then we've got our iShares ETF. So we got our capped energy coming in at 7.53%. Our capped consumer staples coming in at 10.97%. And our capped utilities coming in at 12.41%. Overall, guys, I have no complaints with these returns at all. Keep it up. Keep it up. That may be the most stocks untouched in a single month in the challenge to date. Did I buy anything? So, well, let's switch gears and look at the stocks that we did add to this time around. As usual, Canadian natural resources, as I said, as long as they're down, I'm going to be dollar cost averaging. And we did add another 5, taking us up to 40. That's a 6.01% total return on that one. Now, CNR have had a dismal month, and well, I did have to add one more. I had to take advantage of their price being lower. That does take me up to 8 shares, and they're currently sitting at a total return of negative 6.44%. Now, they are the only red stock. They are the only red stock I have in the portfolio this month. All right. We also added 5 more to London Gold, taking us up to 20. Now, that does, of course, average them down a little bit. So their total return sitting at 25.05%. Definitely not in contention for first place anymore since I've averaged them down 2 months in a row. Also, I added 5 more to T Cash, taking that up to 45. And we got a 0.49% total return on the T Cash holding. This is the shortest list we have ever had when it comes to the stocks we added to. I'm sure next month will be longer. Let's take a look and see if I sold anybody this month. Well, I did. I sold one stock. I sold JEPQ. Well, technically 25 stocks because I had 25 of them. That did net me a full profit of $33.61. I will add that I like this ETF. However, I did want to move those funds into a more aggressive tech play. And that takes us right into our new additions. I only did add that one new stock. I added 20 shares of Qday for $23.90. And so far, since I bought them, they are up 5.40%. So that's pretty good. I do like that. I wanted to jump in on this technology flavor of these new Daymax ETFs to see if it's going to live up to all of the hype. Also, twice a month dividends it's going to kind of be cool for sure. Okay, so now that you've seen all the moves, let's switch gears. Let's take a quick look at the overall portfolio. July was another strong green month, and the challenge absolutely loved it for sure. Looking at the numbers, we did add another 500, taking our investment up to 12,500. The community added another $16 for a total of 1,055 thus far. A huge thank you to the community for sure. That added up to a $13,555 investment for the challenge. We also received $98.63 in dividends for a total of $1,076.32 to date. When we add in the dividends and the growth, we get a portfolio value of $18,702.90. That's not too shabby. Taking that number, we're able to then calculate the challenge total return, which came in at 37.98%. That is a little down from last month, but I'll take it. It's still a great number. Let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there is a link below to sign up for the app. According to Blossom, our top 7 represented sectors are, there's not a lot of changes here. The numbers maybe a little bit, but industrials at the top at 21.2%, energy at 19.1%, fixed income 13.9%, financials 9.2%, utilities 8.6%, materials 8.4%, and real estate coming in at 6.7%. Let's take a look at the toad and the goat of the portfolio for that last month. Our top 5 worst stocks this month are, well, at number 5, Qday with a 5.44% total return. So that's not that bad of a number. Once, of course, the dividends start rolling in, I suspect that Qday will leave this list really fast. At number 4, PPLN 2.44%. At number 3, we of course have Extendicare with 2.27%, T-Cash coming in with 0.49%, and our toad of the month is our only stock that's in the red, and that of course is CNR. They're down 6.44%. Let's see if they can recover before next month. I'd like to see that. Let's get T-Cash back down into our toad position. Okay, let's see who is topping the charts this month. Our top 5 best stocks. At number 5, we've got Fortis coming in with a total return of 28.53%. Number 4, diversified dividend coming in with 29.13%. Number 3, our purpose Solana ETF, 35.12%. Nice. And at number 2, we got Bird Construction at 42.83%. They were at number 2 last time. They're aching to take over first spot again. We'll have to see. But who is our go to the month? Well, it's HBTE, so that Harvest Bitcoin Leaders Enhanced Income ETF, coming in at 46.76%. Holy banana bread. That's not too shabby at all. Tune in to the next update when we're going to do it all over again and see how the market is treating the challenge. I am excited for sure to see where we are going next and to see if that Bitcoin Leaders ETF can hold on to first place. If you are interested in any of the stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on income versus growth. Thank you for watching, and I will see you in the next video.